Hey, Steve Saretsky here. As always, this is Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask that you hit thumbs up and subscribe. Questions, comments, put those below. Interesting week. Just finished up a Vancouver Housing Conference put on by Ben Rabidoux, a good friend. If you don't know who Ben is, he basically runs a subscription service focusing on Canadian credit and housing, mostly geared towards U.S. hedge funds and big institutional investors. So he actually held a private event on the state of the Vancouver housing market, and brought in a lot of interesting guests. I was one of the speakers there. I gave a speech, which I'll basically give to you guys today, and as sort of an overview of what I discussed. But there was also, Mark Cahotis was there, David Eby, Christine Duhaime, who's the expert on Chinese money laundering, and financial institutions. We also had an economist from PIMCO. We had a credit team who basically runs local bankruptcies and consumer insolvencies and whatnot. So basically a whole sector. We also had an entire panel on mortgage investment corporations, so basically the alternative and private lending space, which I've talked about has been growing exponentially in this backdrop. So really just a fascinating all-day event. It was kept private to about 100 people. Ben actually kept the media out of it because he basically wanted to give everybody free reign to open up and speak their mind without being on the record. So I'll share a little bit of tidbits from that. And then we'll sort of dive into my speech, which is mostly on the Vancouver pre-sale market. I've talked about it numerously in these videos about the vulnerabilities that are increasing in that space, which could potentially, I think, they lead into more systemic problems down the road if, of course, that these sort of events transpire. But basically, the overview is, and the question we want to determine is, where is the Vancouver housing market? Where are we in this credit cycle? And credit cycle is something that most people are not familiar with, particularly people in the actual real estate industry themselves. This is a credit cycle that's been going on for 30 years, and much to the chagrin of a lot of smart people, has continued to go on well past its expected life expectancy. Many people thought it would roll over like it did in the US in 2008, but it continued to go on. And so there are certainly signs that is underway. As we can see, household credit again in March was growing at just over 3%. It was like the lowest pace of growth on a year-over-year basis for household credit in 30 some odd years. So there's really been no pickup in credit. You're seeing negative loan growth on a year-over-year basis. In Alberta, it looks like parts of BC now are going to experience that as well. So certainly it's basically a signal that households are tapped out, and at some point they're going to be repairing their balance sheet, which is basically increasing the savings rate, lowering their indebtedness, their debt payments, and then which also has knock-on impacts on consumer spending. And so that was really the primary discussion of the event. One of the things that I found interesting was, Christine's speech is very interesting about how the Chinese were moving money out of China, how Canada really has become one of the easiest countries in terms of getting, illicit money into, or out of a country and actually, sort of laundering it here. So she gave some pretty interesting topics there, and just discussing how tight the capital controls have gotten. China, you're only allowed $50,000 per year per person to exit out of China, and they've just really clamped that down. There was basically, widespread systemic fraud there, where people were basically paying, bank officials, to get their money out in bulk sums. They would fill up basically tour bus of people there, 15, 20 people at a time, and then get them to all go in and wire $50,000 at a time cumulatively to one bank account in Canada, and that's how you would get a lot of money out of the country. So that's basically, a lot of that has been shut down, and it shouldn't be a surprise that we're seeing significant knock-on impacts on the Vancouver housing market, and not just the Vancouver housing market. I think globally that Chinese buying spree has really come to a halt. You can see that in Australia, large parts of the US, where they're actually selling a lot of their real estate holdings and repatriating the capital back to China. I think what was interesting was also in the credit panel. So it's one thing, as I always say, to look at the data, but a lot of the times you have to sort of take the data, try to dissect it, and ask yourself, what does it mean, and combine that with anecdotes that will sometimes paint you the best picture. So you can't always necessarily just look at a single data point and come to a conclusion. And so one of those ones was Ben gave a speech, and he said, if you actually look at it, insolvency rates in BC, bankruptcies has not ticked up in British Columbia. They actually have been declining. They look like they're sort of forming a bottom, but it doesn't look like they're growing. And it was interesting because we had the credit panel, so we had a guy from Sands Associates, who's probably the largest consumer bankruptcy firm. Well, they are the largest consumer bankruptcy firm in BC, and they also brought in a bailiff, who's basically, his job is to basically seize assets from these people. And they basically said, the guy at Sands said they've never been busier. They've never seen any sort of uptick like this, which is interesting. I mean, the guy doesn't have any really reason to lie. So that was pretty interesting. They're actually seeing a lot of realtors, beginning to garnish wages, asking for commissions in advance before they being paid out. And the bailiff even said, he's like, I don't want to offend anybody in this room, but he's like, we are starting to seize realtor leases on their cars. So very interesting. Certainly paints a different picture than some of the data, but I suspect, and Ben even alluded to this, that the bankruptcy numbers are very much on a lagging indicator basis. But this should really not come as a surprise, given home sales, slowing down, consumer confidence. That's going to drag on spending, obviously. So it shouldn't be a surprise that after seeing bankruptcies and insolvencies basically falling to cycle lows over the last couple of years, is that they're finally starting to pick up. So that was a lot of it. We did a realtor panel. We had a really good realtor that focuses on the high-end luxury market in West Vancouver. Obviously, we know that's been hit extremely hard, painting some interesting anecdotes there. One thing that I discussed was the Vancouver presale market. That was my main speech, and I just said, listen, there's, condo sales have slowed to an 18-year low in March across Greater Vancouver. April will be a very similar, if not potentially worse number than March. So you're basically going to have a 20-year low in condo sales. At the same time, you now have a record number of new construction under construction. It is coming, whether you want it or don't want it, or maybe you wish you could put it on hold because the market's slow. That supply is coming. A lot of it has been pre-sold, not all of it, but a lot of it's been pre-sold, and it's been pre-sold to people that had the belief and the mindset that prices would continue to rise, and they would be able to flip their contract. It would be in a liquid contract. You could flip it, it would be a liquid contract. You could flip it, make a quick profit. Some of these people don't even have the financial capacity to close. So you're actually seeing that if you look at the number of assignments listed, new listings by month across Metro Vancouver. They're really at elevated levels that we haven't seen since the last housing boom in 2006, 2007. So we have very elevated levels of new assignments, and with buyers, condo sales being at 20-year lows, inventory up over, doubling from last year, people have a lot of options now, and they are leaning further and further away towards an unfinished product that they can't even walk through. So assignments are becoming liquid, and so you're going to have a lot of closing risks moving forward, which only get heightened as the values decline. And I'm not saying that they're going to continue to decline, but should condo prices continue to decline, that will create closing risks where people, again, don't have the financial capacity to close, or there's a shortfall because every unit has to be reappraised by the bank upon completion. So even though you bought the pre-sale for, say, $600,000, if the bank determines that it's only worth $550,000, you're only going to get a mortgage on that amount, which is $550,000. So a lot of people don't know that. A lot of buyers don't know that when they went in. And of course, circumstances could change. Your job could have changed. Obviously, the stress test came in about just over a year ago, so that's reduced a lot of borrowing power. So there's things that people haven't necessarily accounted for, where this is going to be interesting moving forward. And then just to sort of see, what's happening in the pre-sale market is you're seeing the absorption rate fell to 15% in February, down from a cycle high of 94% in early January 2018. Where now you're seeing the imbalance between unsold inventory that's been released for pre-sale. This is data as of Q1 2019 from Urban Analytics. You can see the number of unsold inventory has just all of a sudden spiked, and sales have actually declined. And so as a result, the developers are having to offer more and more incentives. They're offering, I saw one in the newspaper the other day, they're offering a year's free avocado toast. So that's what it's come down to. So you're actually seeing, this is the price of concrete construction in Metro Vancouver. It just took its first tick downwards for the quarter of Q1 2019. First quarterly decline since 2014. So we'll look to see if that's a new trend, which I suspect that it will be. But again, there is hope certainly on the horizon. I think that, as I've said before, housing starts will fall off a cliff, no doubt about it, which obviously is going to lead to more issues in the broader BC economy as a whole, which the entire real estate market stemming from Vancouver's slowing. You had March sales for the province of BC come in at a 5-year low, and so. But what this does is effectively what we're starting to see now is we're seeing land prices coming down, not only just on single-family land, but on multi-family land as well. This is ultimately, this is the realistic path to creating affordability. Is land prices come down. This allows developers to acquire new land at a more affordable price, so then they can rejig their pro formas to make the building of new condos cheaper. And at the same time, this is like typically, again, this is how cycles work, is, and I'm hearing it anecdotally, is you have construction companies that thought they were going to be really busy. They're booked out 2 years because they think they have all these condos coming down the pipe that they're going to build. Well, now some of the developers are going to them and saying, hey, listen, we're probably going to cancel this project. It's no longer feasible. We can't pre-sell enough numbers at this price. And so now you're getting the contractors coming back to you and saying, hey, listen, we'll lower our price. We'll do it for X. And so this now drives down the cost of labor, right? I mean, it's tough when you have labor costs through the roof because your construction market is running at full capacity. It's actually running at an overcapacity. So what happens is you get this basically reset, and that's part of the business housing cycle, is you get a reset not only in lower land prices, but you get a reset in lower construction costs, and which ultimately you can then, over time, reignite the housing cycle by being able to resell new units, pre-sell new units at lower prices, which can then entice new buyers back into the market. So I don't think it's necessarily something that should be avoided, or that should be necessarily blamed on a particular government or particular policy. I think that these are natural occurrences, and particularly natural that a credit cycle eventually grows tired. So that's pretty much it. You can see last little tidbit was just to see the Bank of Canada come out earlier this week, revising their GDP growth forecast for 2019. Again, surprise, surprise. We've been talking about it a lot in this video. Their forecasts are always optimistic. They cut expectations from 1.7% growth for the year down to 1.2%. So a significant reduction for the outlook of Canadian economic growth. But Pelose in an interview continued to cite that they had been surprised by the particular weakness in the Canadian housing sector. And he said, quote, "We've gone from boom to bust, of course, with lots of new policies in place. But they are expecting, obviously Pelose is expecting that things will begin to sort of stabilize But we shall obviously see. We continue to be data dependent in these videos. It's really just about, hey, if things start to change, if household credit growth starts to rocket higher, if sales and prices start to rebound, we'll certainly let you know. As I've talked about in the last video, there's still pockets in Canada which are showing strength, and that's particularly Montreal and Ottawa, with significant weakness in Alberta and BC. So anyways, hope that video helped. Otherwise, see you next week.